Hello, everybody. This is Kirk Spano, and there's a bank failing near you. No, probably not. Not unless you're on the East Coast or West Coast. If you're just stuck here in flyover country, your banks are just fine. Oh, I want to talk about the collapse of Silicon Valley Bank and what it means to stocks and what it means to bank stocks in particular. You know that I have been saying for years, going back to 2018 at the least, and I probably said it before then, but in 2018, I started telling people, get the hell out of bank stocks, and people told me I was wrong. And I said, well, here's the problem. We are in a monetary era that is going to require several resets along the way, including at some point, the Federal Reserve has to reload its bazooka to be able to handle the eventual baby boomer retirement crisis, which is probably coming later this decade. So we have seen the Federal Reserve embark on a normalization of interest rates, and you really shouldn't consider it to be anything other than a normalization. Remember what Ben Bernanke said to a group of hedge fund investors who paid $150,000 for lunch with him. I believe it was $150,000. He said, I don't expect interest rates to normalize in my lifetime. And what have I said along the way? Well, I hope he lives a really long time, but I don't see that as likely. I have always expected interest rates to go up, and I've always expected it, as I have written about and given interviews on, to be part of preparing for the baby boomer retirement crisis. Because when the baby boomer retirement crisis comes, and it is inevitable, it is not something that really can be avoided. There is going to be a few years where the debts incurred by Medicare and the deficits incurred by Social Security, which is different than a debt, are going to become a crisis that has to be dealt with. Now, the Republicans in Congress right now bring up Medicare and Social Security all the time, and they prescribe the exact wrong remedies, but because they point out the problem, people are like, look, they're trying to fix it. They're not trying to fix it. They're trying to break it more so they can take part in an even bigger skim. The big skim is out there, folks. Lots of hands and a lot of pies that they shouldn't be touching. Worse than American pie. And I think it's time that we all come to grasp what has been going on in corporate America and the banking system and government for a very long time. And for those of you who this is new to, we're getting stolen from. We get stolen from by the richest people in the country and the most connected people in the country. And it's not all of them, but it's enough of them that it's a problem. And what just happened in the banking system is part of that problem. I spoke to 5 bank executives over the weekend, and 4 out of 5 bank executives blamed the Federal Reserve for what's going on now. That other guy who's retired, and he was the highest ranking of all the bank executives, he was the president of a largely family-owned bank. He said, look, all these folks who are telling you, and I saved him for last, who are telling you that the Federal Reserve is at fault are full of shit. There's no reason the Silicon Valley Bank or a number of the other banks, First Republic, had to invest in treasuries that were longer dated. They did not have to do it. They put themselves in a position to be wrong on the security selection. And when interest rates kept going up, which they were told they were going to keep going up, they just decided that, no, the Fed doesn't know what they're doing. Fed's not telling us the truth. So we're going to bet against the Fed. We're going to fight them. And now they got their asses kicked because the Fed is not only a big bully, but they're actually really good at what they do. They just don't tell you why they're doing it. What did you all ask the Federal Reserve to do during the financial crisis? What were you mad about? Who did you want the Federal Reserve to bail out? The homeowners, the small guy, the depositors. And who did you bitch about getting bailed out? The shareholders and the executives. And you said it's not right that none of these guys went to jail. Folks, that was the pinnacle of the big skim. So much money got laundered into individual hands during and following, actually leading up to, during and following the financial crisis, that it was overwhelming. And we have rationalized it with Fed policy that made it okay, that made it normal. And now all of a sudden, the Federal Reserve, knowing that they have another crisis coming, has been pushing interest rates up and doing quantitative tightening. What did I say 5 months before they started? When they announced that they were getting ready to start, what did I say it would be? a reloading of their bazooka. And that's what it's been. And I told you that it would stop when they started to break things. Well, the thing is they really didn't break Silicon Valley Bank. The executives at Silicon Valley Bank thought, well, we're going to take out longer dated US Treasuries at 2 and 3% after we took in all this money. And because those interest rates went up, they lost 10 to 20% of their market value. Silicon Valley Bank had $209 billion at its peak, but at that point, it only had $175 billion worth of deposits. So that was about a $34 billion shortfall, pretty much all caused by their bond portfolio getting the crap kicked out of it. And they had to mark to market. In reality, the Federal Reserve could have loaned to Silicon Valley Bank a week or 2 weeks ago, or 3 weeks ago, or a month ago, or 3 months ago when those executives were selling shares, right? The big skim. They knew this was coming and they sold shares anyway. They should go to jail for that. That's insider trading. The Fed could have loaned to them. There's a provision that allows them to do it if they felt the Silicon Valley Bank was a systemic risk. And they didn't. And they're saying that they didn't because they did not think it was a systemic risk. In fact, Janet Yellen, as recently as Friday, I believe it was, might have been Saturday, might have even been Sunday on one of the talk shows, I forget, said that she didn't look at Silicon Valley Bank as a systemic risk. But then you got Signature Bank and now First Republic, which actually took out a credit line with JP Morgan. What you are seeing is that the mark-to-market rules got these banks in trouble, and then the narratives on the internet from the traders created a lot of panic. And those first people who got into the press and were talking about this, you bet your ass that they wanted to start a panic because they were betting on a panic. So if you think that this is all the failure of the financial system, you're wrong. This was an accounting rule that left the banks vulnerable for a hot minute. The traders ganged up on them. They told a story that's patently false. The stocks got haircuts, and the regulators were forced to come and take over these banks, which the Fed could have saved a few weeks ago or a few months ago, but chose not to. So why do those things happen? Why didn't the Fed lend to Silicon Valley Bank or Signature Bank? I'll give you a couple of reasons. First off, Silicon Valley Bank was taking part in like 80% of all the startup and venture business. That's too much concentration. That needs to be broken up. There should be dozens of banks dealing in that field. There should be competition. I think that's one reason why they let them go down. Signature Bank, what about them? Over a quarter of their business is dealing with crypto, which we know is where all sorts of money is laundered. So the government told them they can fuck off too. Got rid of two bad actors, and Silicon Valley was a bad actor. If you really take a look at that, there was a cult around them that made them seem cool and legit, but they were crooks, and they were monopolizing something that shouldn't have been monopolized. The same way that the big tech companies have largely monopolized tech, and now the governments are fighting back. Silicon Valley Bank found a way to monopolize venture capital and seed startups and all sorts of parts of the innovation economy that needs to be more diverse. There needs to be more competition. There needs to be more brain power. There needs to be less manipulation and control. You just need the competition and the development to be there in a way that's not manipulated by a couple of checkbooks. So now all of a sudden you have all sorts of banks that are going to start taking part in venture capital and startup industries. That's good. So I think the Federal Reserve let them go down because they were a monopoly. I think they let Signature go down because they were helping launder money through crypto. First Republic looks like they're hanging around. And like I said, they've already basically covered their credit lines. And the new facility from the Federal Reserve and the FDIC that basically backs depositors in full is a way of saying, if you don't manage your bank well, we're going to let you go down. We'll take care of the depositors, but you're going down. And you might go to jail if you sell your shares ahead of time. And you might get clawed back if you don't. So you're either going to accept giving up some of your executive pay if you screw up your bank, or you're going to go to jail if you try to keep it. Make no doubt about it. There's going to be at least an investigation into these Silicon Valley Bank executives who were selling stock 2 and 3 months ago. They're crooks. They've been crooks a long time. If you don't believe in the big skim in this country, then you are ignorant, maybe naive at best. I know this because I've seen it. I've been invited to participate. And one of the reasons I'm starting a hedge fund is because now I can go and beat these guys at their own game. I know where the real estate prices are going to go up in the future. It's where the water is. It's that easy. I know the tech, the fourth industrial revolution technology and clean energy are going to be what leads in the future. You just got to bottom tick them, but you can't. So you get close by scaling in. So now that the banks are essentially backed by the federal government again, but not the bank stocks and not the executives, just the depositors. So think about who those depositors are. Well, if you're just a regular person, you're under that $250,000 cap. Virtually all of the money at the banks that is above the $250,000 limit for FDIC guarantee is corporate. It's about $2 trillion. How do we know that? All you got to do is look at the bank balance sheets and then look at all the corporate balance sheets. What have we talked about before? There's roughly $1 trillion on the balance sheets of the QQQ companies. And that represents way over half of all corporate money in America. So let's round up to 2 trillion when you figure bigger foreign deposits and your multimillionaire class. Is it important to protect the multimillionaire class? Not so much. They can do it themselves. They already do. Is it important to protect the corporation's balance sheets from bad executives? Yes. Why? Because you don't want a bunch of executives who are skimming their companies, taken from you, the shareholders. You don't want them to crash the economy like they've done before. So we're in a fractional banking system. The Federal Reserve and the FDIC don't have to back every dollar for dollar. They don't have to say, well, okay, we're going to set $2 trillion aside. They don't have to do it. They maybe have to set a couple $100 billion aside. They've started, I forget what number they started with, but if they have to add more, they'll add more. But it's not going to come to that. What did we learn the last time this happened? Is just the promise of being there is enough to stop the bank runs. So the Federal Reserve is having meetings between now and their next official interest rate meeting. I'm sure they're talking today. I know they have a meeting today that's closed door. Here's what they're going to say. They're going to back corporate deposits at banks with a different number than what they back individual deposits at banks. Remember when it jumped from 100,000 to $250,000? Everybody thought it would go back to 100,000, but it stayed at $250,000. They're just going to add a number and say, if you are a corporation and you have X amount of dollars at a bank, we're going to back it. And they might not back it 100%. They might make it tiered. They might say the first, pick a number, is backed 100%. And anything over that is only backed 90%. What does that do? What does that make happen? It means that the biggest corporations would spread their money around. They'll come up with a number, and they may or may not tier it. I think tiering it would be the smart thing. So I think that's why they let those banks go down. I think that's why they're backing the depositors now. They've set the message that if you blow up your bank, the shareholders are going to get a haircut or go to zero, and the executives are going to pay back money or go to jail. Don't blow up your bank. Now, that has some implications for the economy, doesn't it? Hopefully, it means they're smarter on their selection of assets that they put on their balance sheet, but it also means that they'll probably lend differently. What if I told you this happened to my credit profile over the last year? Over the last year, I've been given roughly $100,000 of credit card limit. Do you think that'll happen in the future? No. They're going to have to make sure that they're not taking losses, and the deals probably won't be as good. And I've just been rolling my debt, zero interest to zero interest. I think that might have just ended. I think Citigroup, which has a history of being dumb, might be the last one. Their Simplicity card, you can put credit onto it for a 3% upfront fee. Then you get until 2025, January 2025, before you have to pay interest. Think that through. Citigroup has blown itself up 3 times. If I ever told you the history of Citigroup, I know I have. I haven't done it probably for a few years. Do you know where Citigroup came from? It was a combination of an insurance company, a bank, and the pension fund from American Can Company, which is a company that went broke in the early 1980s. They sold off the Continental Can. That got split off. The executives split off all the financial assets. They went asset light and asset heavy. Manufacturing over here, finance over there. Which shares do you think the executives kept? Aha. Big Skim's been around a long time. These executives learned from the mafia. There's no doubt in my mind that's what happened. Or the mafia learned from them. I don't know. So when you take a look at this, remember something. If the pile of money is big enough, there's somebody or lots of somebodies trying to figure out to get more of a share than they really deserve. Not just get their beak wet, but practically drowned. There's a lot of lying, cheating, and stealing out there. And these narratives that you get are part of it. They get planted, they get watered, they get fertilized. Then the tentacles of these octopus man-eating plants get you. Any of you watch Gotham? If you do, you're noticing that Ivy, who has now become Poison Ivy, is pretty wicked. Remember when Matt Taibbi called Goldman Sachs the vampire octopus? There's so many people trying to get your money. And if you play into the narratives, especially if you get emotional, you're going to get screwed. And even if you get scared out of bad investments before they go bad, you might still be scared to buy later. That's a problem. So understand that the Federal Reserve is trying to fix things right now, and I think they're doing a pretty good job. They've done what you asked them to do. Get interest rates back to normal and let the bad actors go down while taking care of individuals, families, and employers. It's essentially the three groups they're going to protect. Shareholders, you better police your executives. You better stop rubber stamping all those incredibly stupid compensation packages and voting for the stupid things that they do that really are just there to enrich them. So you lose money on a bank, shame on you. You lose money somewhere where the executives were doing something that people said they shouldn't do, but enough people voted to allow it. I've fallen into that before, at least a half a dozen times. I didn't take the warning seriously, and I should have. Now, there's all kinds of short narratives out there where they don't belong too. So you got to parse it out. What's real, what's not real. You're going to make mistakes. That's why we make our bets small. We scale in slowly over a long period of time at wide price points, so that if we're right about the long-term business in space and clean energy, fourth industrial revolution technology, and how real estate is going to be transformed, how agriculture is going to be transformed, how travel is going to be transformed. If we're mostly right about those things over the next 10 years, and we take a couple of years to invest at different price points, the highest one we'll regret, the lowest one we'll wish we did more of, but we get a good average low price, and we're mostly right about the 10-year outlook, which is the easiest outlook to be right about, right? Because you know the general direction. It can go gutter to gutter, curb to curb, but we know the clean energy is going to be 80% of energy in the 2040s or 2050s. It's a ride worth taking. We know the fourth industrial revolution technology is going to close the labor gap continent to continent, which means that the more expensive labor continents have an advantage in that, right? The cheap labor in China is not going to make so much of a difference in 10 years when everybody has a robot doing the grunt work. It all evens out. Technology is going to even things out in a lot of places. So you have to figure out who really has the advantage with technology. Once it becomes more expensive to move something from China to America or China to Europe, because the robots in both places offset the lower labor by wiping out the transportation costs, you start to go, who has resources, who has labor, who has brains, who has finance, who has safety, who has laws that protect property rights? It's kind of a no-brainer that North America wins. We've got everything. Nobody else does. That's why I invest in the United States primarily. I like emerging markets in some aspects. I really kind of like Africa. I just don't know if I'm going to live long enough to see those investments work out. So the Fed is doing what you want, and they're going to be ready for the boom or bust. And this idea that U.S. debt is going to screw us up is wrong. What President Biden proposed the other day, did it not sound exactly like what I've said 100 times? Just get rid of the loopholes. That's all you have to do. Now, I will say that he went a little overboard because real estate redevelopment needs tax advantages. Otherwise, a lot of the marginal real estate doesn't get redeveloped, and it needs to be. And you end up having the government building low-income housing rather than entrepreneurs building really nice stuff and making it better, and then taking the stuff that was in the middle, and that's what opens up for low income. So everybody wins. Pull it higher. Don't create more at the bottom. Just pull everything higher. Give everybody something nicer. Don't need to build hovels. But the step up in basis at death needs to be mostly gotten rid of. Carried interest needs to be mostly gotten rid of. Capital gains tax breaks for millionaires needs to be gotten rid of. And there's really not a reason why you should get much of a capital gains break on trading securities if you're super high income already. Right? There's a lot of manipulations. And what I have learned And anybody here who is an accountant knows this. So the richer you get, the easier it is to avoid taxes. Close the loopholes. The things I've talked about balance the budget all by themselves. Now, that doesn't mean that we can keep spending willy-nilly. There probably does need to be a lot of freezes on spending, at least for a while, till the demographics even out. Because the mandatory spending you can't get rid of. You can't tell senior citizens that they're not going to get health care or money for food. You got 70% of the retired live exclusively on their Social Security. Talk about pissing off a lot of grandmas and grandpas. Man, I don't want to see that million-person march. Dentures and canes all over the place and walkers. It scared the hell out of me. Oh, this is important because the banks put a lot of money into U.S. Treasuries. And this transition was seeable. I've seen a couple of people write about it. They didn't know what it was leading to. I've been warning you since 2021 that this was coming. Now, the impact on stocks, I'm just going to focus on 5 that have been on our very short list. Roku, Rocket Lab, Roblox, Ginkgo Bioworks, and Sunrun. Roblox isn't currently on the list, but I'm going to add them. Roku, I'd have to check, may or may not still be on the list, but I'll add them. Roku is actually something I've been looking at lately because it's just gotten so cheap. And I think they are to the point now where they can't get much cheaper because somebody would just buy them out. So you have a margin of safety with Roku now because the buyout value is about what it is right now. Can't go much lower. And if it does, it'll just get bought out at roughly the current price. Their share price got beat up a little bit with Silicon Valley kind of ahead of time, and it's bounced back a little bit. I think it's going to chop. So here's a low-risk way to invest in something that might do really, really well. It'll be an execution story for them. If they execute, they probably make it halfway back to their highs, maybe a little bit better. Rocket Lab, I've talked about them. You know that I traded them if you're following the chat. I bought them today. That's the article I'll show you in a second. Roblox, them and Unity could be owned together as a pair. You know, I own a lot of Unity. It's a full position. Ginkgo Bioworks, they got beat up a little bit. They haven't caught a break in a year and a half. People just hate SPACs still until they all double in a year. And then people will start buying them and they'll buy the breakouts and blah, blah, blah. Then they'll get FOMO and they'll set new highs. Ginkgo Bioworks has a great platform. And the thing that people don't think about is this. In an era where AI can take data and find answers, Ginkgo Bioworks has one of the biggest health and genetic and protein-based databases out there. I think Ginkgo Bioworks is going to do something that makes sense. I think they're going to start making some of their own products. So they'll be both a platform company, which is what the founder envisioned, but at some point, an executive is going to tell him, dude, we don't have to be one or the other. We can be both. We can Bo Jackson this shit. Ginkgo Bioworks is going to start developing their own products, as well as take in all sorts of recurring revenues from royalties, and then utilizing the data that's part of those deals. Sunrun, we've talked about a bunch of times. I love the company. I like what they're doing with Costco. I like what they're doing with the car companies. Understand what the future of the corner car dealer is now. They're either going to become a big independent with a great online business, and they're going to add energy operations, or they're going to go away. The little corner lots are already disappearing. The big dealerships are shrinking. There's one being remodeled near me, and it sure looks like they're putting on a solar roof. I'll know in a week or two. So in the future, when you buy a car, you're going to go online, you're going to shop around. You're going to say, I want to test drive these 3. You're going to go to that part of your town where there's 10 dealerships. You're going to test drive what you want to try. And it's going to be an EV, more likely than not. By 2026, it for sure will be, unless you're buying your last ICE vehicle. And they're going to say, okay, you're going to buy this EV. Do you have solar panels? And you're going to say, yeah, I do not have solar panels yet. Okay, let's borrow another 20 grand, put solar panels on your roof, give you a battery system made from something that doesn't catch fire, right? Everybody's worried about lithium ion burning their house down. The batteries you're going to use are not going to be lithium ion. Sunrun, SunPower, a couple of others, Generac, SolarEdge, Enphase, they're going to make a lot of money because this whole energy transition isn't just one thing or the other. It's all these things together. So we should be looking at all of these. If you don't have positions, we should be thinking about it. I don't know what the exact right price is on any of these, other than bought Rocket Lab today. And you know I already own Ginkgo Bioworks, and I might add my last tranche imminently. Now, one thing to consider is this. With the Federal Reserve knowing that employment is high, and now that they've backstopped the corporate depositors, they don't have to back off on interest rates or quantitative tightening, especially if they've been fighting foreign inflation and keeping the dollar high against China, Russia, and OPEC as a primary cause that they're not telling us about, which is, I'm positive that's what's going on. I still like around Labor Day for the Fed to start loosening up a little bit, whether that is the last interest rate hike or whether they start getting rid of QT. I will say that I think that they back off on QT by the end of the year or early next year. I don't know that they get rid of it, but I think they for sure cut it in half. The bazooka is almost loaded. If interest rates are 5-ish%, which is normal, and the balance sheet has shrunk by a couple $1 trillion, they're in good shape to fight off the boomer bust. So here's the portfolio tweaks. Closing the Activision position. That was one in the chat. I'm up just a little bit. I want the cash for optionality. What is optionality? Optionality is the ability to strike while the iron's hot because you have the cash. So Activision was about 7% of my portfolio, 6-7%. I closed that today. Took a very small profit. Considering the regional bank ETF, KRE, because the regional banks at some point could do very well. This is the discussion in the chat room that Shooter and I had. I don't know how well you can read that. I will try to make it a little bigger. That's about all we're going to get. So I think those mid-sized banks are where the rally will come. Large banks are large banks. I don't want them. Small banks are very local. I'd buy one if I could afford it, right? The whole thing. The regionals have a lot of room for consolidation and mergers of semi-equals. That also gives them a chance to expand their online presence. Now think about that. If you have 2 or 3 regionals merge and make another national bank, they put all that internet technology together, all those databases, all those people, and you have another Bank of America or US Bank, whoever. So suddenly go from being beaten up to a year or 2 out. They've consolidated. They've closed branches. They sold off real estate. They have better online operations, and they're once again in a falling interest rate environment. So these regional banks have some upside. I just don't know what the bottom price is. But the high was 73, which is probably 10 to 30% too high just on valuation. And then there's another 10 to 30% in dilution for the banks that are going to have to dilute. Because when you borrow from the Fed, they give you a year to pay it back. It's basically a year to figure out how you're going to handle things. So in the next year, a lot of these loans will be taken. And in the year following, a lot of mergers are going to happen. So the next 2 years or so, you're going to see big changes in the regional banking structures. You're going to see more big banks and more small banks. And that middle part is going to get hollowed out. So you have local banks, right? State charters. Then you're going to have national banks. But these banks that operate in 5 states, not going to be many of them left. So somewhere between 35 and 46 is what I see KRE getting to. 46, I'm probably not going to buy, but 35 I would buy. Right? I want to get rid of as much of that potential price risk as possible. If it happens, great, I buy it. If it doesn't, I move on. At that point, I start to cherry pick the banks that I think have a deal coming. I'm good at that. I'll find 1 or 2. Shooter was kind of, for the most part on board with that. Me, as a big fan of Dr. Seuss, I wrote a little poem. You can go on my Twitter feed and see it, or go in the chat room and see it. The chart's moving around a bit. Shooter's done 2. This was the earlier one. He targeted 35 as a potential, bottom. Price started to rebound a little middle of the day, and, maybe it's 38. Anyway, that middle 30 seems like pretty strong support to both him and I. I think it's interesting that where KRE started is right where it is right now. Down here in the 20s would be your Armageddon zombie apocalypse. At that point, you back up the truck and you buy everything because the Fed is coming to help. One of the other things I bought, again, was clean energy. This chart's been around a while, finally in the buy zone. Doesn't mean it can't go lower. It certainly can. All right. One last thing before we go, because I've been talking about energy more the last few months. What did I say the federal government would eventually do to refill the Strategic Petroleum Reserve? They would cut a deal with the big oil companies, right? I say that again. Right? So this deal got done. It was in the process of getting done. And the way that they're designing this deal for ConocoPhillips is that it's probably the last major oil deal the U.S. government ever allows. That's it. And one of the things that people are missing on this is the way they're carving this out. and the way the infrastructure will be set up. If the planet does keep warming up, which seems inevitable, now all of a sudden we have infrastructure in place to drop hundreds of thousands of more people to live in Alaska because the bears need food too. All right, I'll let you go. That's the best punchline I could get, but it happened. I told you it was going to happen, and it happened. I think this is the last big oil project that will ever get approved. I think this is being set up to be the last one. There you go. Have a great afternoon. Marquette will make the Final Four, and Aaron Rodgers, I think today sometime, will be a New York Jet. All right, take care.